Those are from yesterday. Okay. All right, we'll go through the charts. S&P hanging right in that same area in the daily. 4 hour, same deal. 1 hour's hanging out too. Pretty choppy. I mean, this is each new trading day, so you can see it's chop, chop. Starting to have lower highs. So it might try and test down here, but so far it's still holding in these red bands, so buying the dips. Same with the NASDAQ. We'll go to oil. Oil daily, we've had a few day bounce. Kind of running into trouble. Definitely hit the 4 hour top band. Run out of momentum here in the 1 hour. $15 seems all right. And then the 5. And then the dollar's been moving today, so it seems to be bottoming. Strange moves here. Gap up, gap down. Definitely trying to bottom. Crude's starting to move a little bit. So going forward for the rest of the day, or the way I look at it, once again, it's the headlights. You're in the dark woods. You got to just keep in front of you. To me, it seems like this will gravitate to the 48 midpoint. Might run into trouble here. So over the next hour, we could see it maybe going up to this level, 48-ish. Trying to see if we can get an entry point for a long. Hit a couple so far, plus 320. So you could see how this is a progression of a trade. Caught a bounce here. Got in here and broke even, and then got along here, got out here. Really, same price, it's almost 60. But this is definitely good bottoming price action, so I like to look to try and get long. So the way I do it is I put an anchor price on. So I'll say this made a big down move, it bottomed, it gave a signal price in here, and so depending on, some people call it, like Andrew called a pivot. I just look at like an anchor price. So in my head, I have 47.41 right now as an anchor price. So if I can get near there, I like to get long. I think you go further out time frames, definitely can go to that 48. You could see as you step back, this is a 15-minute chart. Now, I remember that was the shortest time frame when I ran a fund that I would go down to. So this is definitely a pullback and a buy. You could go back and test these highs. So when you start to put the perspective in your head about the different time frames, when we're looking at 1 minutes, we're just doing that because A, to reduce risk, and B, to make it combine friendly. If we came here and did one trade a day, you know, kind of gets the learning process is a lot longer versus on the 1 minute. We've talked about that, but that's kind of the idea. So if in your mind I'm even going out to the hourly. You know, the hourly, we've had these decent up moves and then seems to be running into trouble here. So I'm not super bullish. I just think that as of right now, we're going to probably bounce up, down, up. Here's the midpoint, 82. Could even get, maybe even test the high again. We do have the API numbers today. So the API numbers are kind of a precursor. They've been better lately of predicting the build or draw versus what the Department of Energy numbers that come out. So we'll see if that'll weigh on the market from a bearish perspective. But as of right now, you could see it's kind of breaking out. So from a trading perspective, I'd like to build a position if you want to get back with the trend. You know, you could see where we bought. Pretty good spots. Took the first low risk, so duration, that trade was, I don't know, a few minutes. You made still the bulk of the move. Now, you'd probably want to try and, for me, as a swing trader, because we've been talking about swing trading, you want to keep a one lot on. So if you bought two, you sold one, you might even buy back in at a better price, cost basis. You almost got back to your entry price in these wicks. You get back to two, now it's breaking out, you'd probably sell one when you get a 1 minute. Not yet. It's just breaking out. So you could see you buy two, sell one, you might have bought back in near the same price, entry price here. Literally what I've done in the past is I'll bid it at my entry. You get lucky, great, which it did. Now I'd sell one just because it's how usually when it breaks out, it runs into some trouble lately. And then you've got one on, still break even. It'll start to run into trouble here. And then that's the kind of let me see. Okay. So let's see where it gravitates to. Trickling higher. You can see it's coming right off the bottom band here, but it's running into that red band, so that's why I would say you'd trim some risk there. But really, it usually gets enough momentum to get you to that midpoint or somewhere in this triangle. Stock's just been so choppy lately. Once it has the morning spike, whatever time that comes, it's pretty much done for the day. And the choppiness. They're definitely trying to just, you know, there's a lot of distribution trying to sell it, but I would think it's going to come back down to the gold band, just then based on the red band momentum. You could almost look at it. It's two cars. The gold is the gold bands are the one pair of headlights, and the red is another pair. So you could see where it's kind of going into this area. Although the higher time frames seem like they can kick into the upside. Yeah, I usually just stick with, for shorter term trading, I'll look at the 1 hour and then the 15-minute and then the 5. I'm not one to short the market at this point. We've made a bigger move now on crude. It's getting up to that higher level. At this point, it's a great trade. You've caught multiple different pieces. You can blow out of, you keep making the next higher move, so now you blow out of your last piece. Who cares if it goes higher? This is just 45-cent winner on one, 25, 30% winner on another. You've got a phenomenal day. So for swing trading, that's kind of, I've joked around, but I've called it country club trading, but it really is. You got 2 trades, you've made $700, $800, you're done for the day, and that's a 1 lot. Go and see what else is moving, right? Maybe see if you can get an opportunity to buy the S&P down here. Or because the Nasdaq's stronger, if the S&P got down here, since they're highly correlated, the Nasdaq might be around here and then could look for a buy. People always ask me, why do you not get short at that point then? If you think it's going here and it ends up going to that spot. Well, like I've always said, there's an infinite number of trades in a day almost. So you have to pick and choose. You have to say, is it going to do that with a percentage chance that's greater than, I prefer 70+%, I prefer 3-to-1 profit to target. So I don't want to risk, right now for to sell it at 95 to make 2 points, what's my risk? You want it 3-to-1, minimum 2-to-1, so you basically have to risk 1 point to make 2. I guess you could take that trade. Not my cup of tea though, because I'm fighting against the higher trends. Although for me lately on the shorting end, it seems like you get these kind of super big ramping spikes, and those are the ones that it's hard to short, but I think you just have to wait for it to start to make a topping pattern, and then you just wait for spikes in there to short. Same here. Like, you don't have to short it here and then get freight trained and then have it sell off and you break even or take a loss up here. You just be patient on the shorting side. I also go with a kind of I lean one way or another on a market. So for me, for Andrew, he flips long and short all day long. I'm just usually painting a picture and I say, okay, I'm going to stick with that. That's my game plan. That's for today. It typically runs on the higher, the 4 hour or the 1 hour. And then I base my trades on that. I wait for opportunities. They hand you a gift, you take it, and then you're done. So same thing here. We got below the bands. Take some trades, catch some quick profits, very low risk in the trade for a very short period of time. And that's it. Now you wait for the next, if we can get back down in here. Not bad. Let me get this lined up. See how it just got to that red band and it just hugged it. Could knock it back down to the midpoint, down to 70. S&P back in that I think it's stuck in this band 97 and 92, maybe not even 90, 95, 93. Just marking time. If you're long, you've been long for a very long time, 5 years, 6 years. Fund managers are always long. It's just a matter of how long they are. Short-term traders have been annihilated because they've mostly been trying to short this and bearish, so they don't exist. Basically, even with our meetings and talking with some of these different trade groups, you'd be surprised that thriving offices that used to have 1,000 traders now have 46. But that's why you have to be flexible. You have to really be focused on going with the market and not going with a theme that you've, I call it fundamentals. The fundamentals, and believe me, my accounting is background. My background is accounting, so I know about fundamentals, and it's almost not even is it worthless, but if you think and trade based on fundamentals in the last, I don't know, 8 to 10 years, you got blown out of the water. Because none of the fundamentals, you know, they were phenomenal in 07, you would be getting long and got killed in 08, 09, and then the fundamentals have been terrible the last few years. And you get, if you were trading based on that, you'd be pretty much beat up. So I like to show the gotta get some of these. We'll go through the futures chart since we're kind of stuck in a range. Grinding at the top again. Energy you can see is bottoming. Metals too. Grains. So that's going to put pressure on the US dollar. That's what I've been talking about. This was the Fed day. That's a real print. 5% move in basically, I don't know, one spike, 1 hour. So now we've come down and tested it. Although depending on the index, some were better than others. Some went lower. Because I have a low today of 96, but depends on how they calculate it. Currencies have definitely been bouncing lately. There's the dollar index with that strange move, so you could see that. Let me real quick get you guys the where is it? When I talk about fundamentals. I'll go through charts again. Daily, we're kind of hanging at these highs on the S&P. Here's the 4 hour, kind of in a choppy range the last couple days. 1 hour, we're starting to lose momentum. You can see the lower highs, high, lower, lower, lower. We're starting to bend down. We've got a couple 4 hour sell, and I'm sorry, 1 hour sell. So there is a possibility it goes and tests down this lower area. 15-minute. And then the 5-minute. So based on how the bands are coming down, I think it's going into this area. But you look at it's a 2-point kind of range so far this morning. Definitely some distribution. You're getting lower high. So Seems like it's going to gravitate into this area. Crude oil, we were going through the charts on that. Daily, we've had a couple day bounce. 4 hour, we've kind of hit the top end of that band. 1 hour, we've held overnight, and then yesterday, and then overnight at that band, the gold band, which is very important. Here we go on the 15-minute and 5. You could see as it was holding the band, that price was around 47.40. You can see our trades. We got it at 41. So what I'm basically saying is that different people, like Andrew, have pivots. I have what I call an anchor price. If I think that we've had a big down move, we get to an area that there's a trigger point. To me, 41 was an anchor price to get long. See, we got long, didn't work out. We broke even, got long again, took the profit. We also had a long over here for a quick trade. Here, long here, and long here. So we're up 32 cents. But if you want to work for a swing trade, what you would do is if you got long 2, you sell 1 to book a quick profit based on the first impulse move. Then, to me, I use the anchor price. I literally bid it at that same price, which you actually would have got filled here if you were bid it. You could also look at different systems or signals. I have a turn buy. Andrew has a turn buy. So those are areas getting long either at the close of this bar or the close of this bar. Same here, close of this bar, close of this bar. So these are entry areas too for adding back into your position. You always keep the core position on. Once it goes your way, you could put a break-even stop in, or even stop at the low. You kind of have to give it some wiggle room when you're swinging trading versus kind of super short-term trading that we've done for the room. So it is combine friendly. It's just a totally different style. Swing trades usually last for upwards of a few hours. Could be even longer. If you go to a higher time frame, you're looking at a daily chart. You got to go higher time frame though. You could see that we've had an up move down a new high, so it's still in a bull market. A pullback, it made a lower low, but still you could see our entry prices are right at the area that you want to start getting long at. And then for the swing trade, really the target's there. You're all flat. I actually earlier on in the room had said about how in this impulse you'd sell 1, and in the last impulse you'd sell another. So you'd miss out. Who cares? It goes on. I think 80 was this final sale. So what? It went 20 more cents. You've caught a major move on a swing trade. You made 40 on one and 25 on another. You're up 650 on a one lot for the day. You're done for the day. 2 trades. That's kind of how swing trading is. I joke around about it, but it's called also, we called it back in the day, country club trading. Very calm. You get in your trade, you've got a target, and you just let it play out, and there's less frantic. It's not so frantic of trading off a 1-minute chart. You also look in perspective of 15. From a technical perspective, you've got up moves still held. You've got another push. Finally, we've got a lower high. So to me, this pattern is topping on a 15-minute. This is a topping pattern. Yes, we got long here. That's just trading for a bounce. But you could see here that's technically higher high, lower high, lower low. The first lower low since down here. Since the bottom move, which was at 45. Now we're trading $3 higher. You're going to be getting long. You want to be more patient, etc. Or less aggressive. Wait for your spots. Like now, if I want to get long again, I'd say I'd want to get long back down here. So people ask, well, if it's going to there and you're think that the odds are it's going there and you get long, why don't you get short? Once again, millions of trades possible per day. I just pick the ones that I am comfortable with. I go in with kind of a mindset. Andrew can go long and short all day long on a shorter time frame, and that's his style. For me, I go in with kind of a theme. What is the market going to do? what would it have to do to play out to my theme, and then you just execute your trades based on that theme. If it goes off theme, you don't trade. Not going to kill you. The market will be open tomorrow. If you go and force a trade, do something that you're not seeing, you're doing something wrong, or, well, I'm digging my heels in, I've got my ego going, and I want this, I think the market's going to be up today, and you just keep buying and losing, that's just it's a recipe for losses, really. So you kind of look at it in a perspective of what the market will give you. Let me get these back lined up. So you can see crude, red is the rate of change, it's slowing down, so this didn't go and blast at the top. That's why off this bottom it said, okay, take some profits. As I was talking before, you can see that the trend is showing in the short term to get to here, but when you go to a 4-hour or a 1 hour, it's still in an uptrend, especially the 1 hour. Even these little probes, lower wicks, couldn't hold and they came back on a 1 hour. So that's kind of a prime reason why I'm not going to get short to make 2 points. So I always want to have a 3-to-1 is my best risk-reward ratio. So 3-to-1, okay, you short in here somewhere and you want to make 2 points. Well, it's almost impossible. What, are you going to risk a half a tick if you got short? So it's really not worth it. 2-to-1 at the minimum. And when I say 2-to-1, make 2 S&P points, risking 1, and then have a 70+% win-loss ratio. You can see how now the power comes back into the bears, and now it's going to gravitate back down to that line on crude. Today is the API number, so later on this afternoon, what the build or draw is, I mean, it's most likely going to be another build, and that does give a precursor to tomorrow's energy numbers. There's a lot more. Basically, there used to be just one crude number on Wednesday, and then now there's these different firms that jumped in to fill in the void, private firms, which is good. It should be. You want to sit around once a week and wait for this data. There's one that comes out from Glencore on Monday, today's API, tomorrow's Department of Energy, and then we've got Thursday Glencore. They do twice a week now. They use literally lasers to measure the stocks, so it's seems to be pretty accurate. It's new. It's pretty good. But fundamentals, that's where I was going into the fundamental story. There's 2 different ones here. Let's get the where did I get that? That's the Railfax report. Railfax report. Fundamentals haven't worked the last, I don't know, 5-6 years. We've had quantitative easing. It basically throws fundamentals out the window. My background as an accountant, I get it. I know what the fundamentals are. So to me, tell me the volume being shipped, and that's because even prices can be distorted. If you've got 3 stores in a neighborhood and they all sell something for $1, and they each sell 1 a day, there's 3 customers, and one of the stores goes under. Now there's 2 stores, and someone comes in and buys in one of the stores, and then the other store that's open, 2 people buy, and they're going to be like, whoa, our retail sales went up 100%. You average between the two, it's a 50% increase, or a 50, either a third or a 50% increase, depending on if you look at the individual store, all of them combined, and the increase in retail sales. But it really is, not real. It's the same amount, and that's what's been going on with retail sales. So I want the raw numbers. I don't want a percentage. So you could see we actually are. This gray line is a year ago today. You can see we are actually higher up from an economic perspective. Intermodal is Walmart stuff. This thing gets kind of annoying with that the little marker, but you can see that the green is pretty close to that. And then this is the Christmas drop off and then the ramp up for Christmas. You could see it should be bottoming and starting to turn up, and it was starting to, and then the last few weeks it's made this new like little, it's hard to see now, but we'll watch it. This new dogleg lower should not be occurring. It should start to ramp, so we'll see. The green is pretty close to where it was. It's not much higher. It's up 2% in actual shipping. So that's definitely one fundamental way of looking at it. And then, where's my Baltic dry? Baltic dry. Price is $5.59. You can see in the '08 crash, I think the low was 800 something. We'll zoom in more. It's never been lower since they've been keeping track since, I believe, the 70s. So in constant dollars, not adjusted for inflation, it just took out the 82, 81 low in that recession. So that's one place that you look at what the actual price of shipping something in a overseas is dropped that much. Here's your gold chart coming in. I like spread trade, so that's pretty interesting to see that gold came finally years later to meet up with it, although it's still high on a longer term chart. Commodities coming down, so you could see if you look at fundamentals and economic recovery, it's certainly not showing up in the Baltic. It is a little bit in the rail, but a lot of this rail, when you look at total traffic, it's what's going on in North Dakota. So you've seen a 100-fold increase in traffic based on the oil shipments. I believe cyclical. It's either cyclical or baseline is coal and grain, and then steel and lumber. I would think it's probably under baseline, but I'm not sure. No, it's not. It's cyclical, because cyclical is higher now. So all the oil being shipped through economic sensitive. So that has boosted traffic up. I don't know if you strip that out what it ends up being, but kind of, you look at the baseline, it's pretty much the same. Back to the charts. Oil got it back gravitating down to that gold band again. So I think it probably gets stuck in that range for a while. You could see how once it starts drifting up, it's just trickling higher, and it's really shorting, not a great idea. To short that, it's just a freight train. Even if it's above the band, you've got the higher time frames kicking in here. We went on the 15-minute from there, and now we're up near the top band on the 15-minute. So seeing our trades again, holding a trade for 1, 2, 3, 4, 5 minutes. Out at 60, we just tagged that price recently. So if you're like, well, I'm going to hold it to the close, or I'm going to hold it for hours, you still have to have a disciplined approach in your head, like, I'm going to sell at this price, I'm going to get in at this price. You have to look within reason. You get X amount. Is it worth it to hold 40 more minutes before it broke out above that? Now, I could have bought back in on the breakout, but you have 40-minute risk that this could have been a top rolled over if today's API number comes out. very bearish. You know, big build again. Oil can easily go, you know, go back down to here. So now you turn a profit into a break-even stop out, or worse, into a loss. Never turn a profit into a loss if you have a decent trade that goes on. You know, once you get it moving, if anyone has questions, let me know. So this is why when I talk about fundamentals, really most of the fundamentals, yeah, it's an excuse for certain traders maybe to say, well, I think it's going to be this, and they'll go and make a decision based on it. But got to remember 80% of the price action is algo based, and you could show every bearish fundamental number, all these numbers are coming out, and the market still climbs higher because it's just based on guys that are turning on those algos are hearing that the Fed is on hold. Pretty much to me, it sounds like after what Fisher said, the rest of the year. So they won't be raising rates the rest of the year. So more stimulus, more printing. They're still rolling over. I was looking, it was actually for the week. There's still the MBS rollover is still $7 billion a week. So about $1.5 billion a day is still being pumped into the marketplace. So we're still in a kind of tiny QE, let alone Europe and the Bank of Japan. So you could fight that, but good luck to your trading account, shorting it. You know, I just can't do it. Not my plan. Let's see, nope, no questions. Okay. Yeah, it keeps freight training that. So now we're starting to get into a point where it's extended. Go to a 1 minute, there you go. Aggressive trader, you could short it with a stop right here at the high. Short 59, the stop would be 60, literally risk one NASDAQ point. Just based on how it, now what's the risk reward ratio? Is that one that's kind of, when I start to list trades out, you know, I'd say there's probably a 60% chance that trade works out, that you can make 3 versus losing 1. Let's see how crude pans out over here. Crude just seems like it's kind of going in either into this, back into this triangle, or back into here, and that's that pattern that I was showing over here. Higher lows, higher lows, higher high, higher high, higher high, higher high, lower low, lower high. Distribution. Doesn't mean it has to go back to here, but it's definitely, be very cautious on the bull side. I would say if you were looking to buy, I would wait for my 41 anchor price. Now I get to see how, if it prints a new high there, gets stopped out or not for a point loss. pretty much. There it is. So you lose a point. You had a chance to make, 3. Didn't work out. You move on. But those are the kind of trades you want to really not get too. You don't want to overtrade. So that's why when I look at trades, a percentage chance for working out, I like it to be a lot higher. That's for sure. Definitely want it much higher. Although it looks like it could have been a stop hunt. See how they, by 1 tick higher, they took it out, and see if it rolls over. Does seem like that. So that gets you to where do you put your stop in? If you put your stop in at a certain price, you've got to be aware that there's literally algos or traders, fund guys that hunt for that kind of stuff, because they see that everyone's trying to. They have buy stops all up there, and they could see them. They place them with the exchange, so there's perfect visibility for that. Now it's going to start to roll over. So that definitely occurs a lot of times. Just don't like the higher time frames still being so strong for shorting. You'll feel when you're fighting the trend. If you get in a trade, it's almost like it goes against you, and it's so difficult, and for you to get even profitable, it's just such a pain. It takes forever, and you really start to feel, no matter what the time frame is, they all line up at some point, and when they're all lined up, you really get a point of you're kind of a fish swimming upstream, and no matter what you do, it doesn't seem like the trade can work out, and there's really a purpose for that. That's because you're fighting the trend. Now, it doesn't mean that when the best and fastest profits besides shorting, because shorting has a particular mentality of, especially in equity markets. But when you look at the trend reversal or a switch in the a short-term trend switch is really when you get a lot of quick profits. So you have to watch out for that and be able to kind of put it into your trading style / system. See, the dollar's kind of breaking out right now, so that's going to weigh on crude. Never did my spread charts. Oil is really starting to correlate with the dollar. Again, as it should. I mean, it usually did. It hadn't lately. Dollar rally, crude goes down, and vice versa. Dollar sells off, crude goes up. So you can see now the dollar is over here when crude was at 44. So we'll see if they come together, then crude's going to 45 half. S&P and yen definitely disconnected right now. Could see the yen and S&P rallying though. Remember, up to probably 2 weeks ago, these were tick for tick. They would go up and down together. Now you could see how they're spreading out. Shorter time frame, but same thing. This dollar is definitely picking up. It's weighing on crude. Definitely weighing on crude. Yeah, it looks like the Nasdaq did print that little stop out. That's why sometimes you have to have the stops on the close, or maybe give it another extra point above so you don't get stopped out. For me, I'm less concerned with stops because I'm disciplined. But as a new trader, you gotta stick with your stops. Let's go back to the 5-minute. I believe Andrew's on a plane right now, so for everybody in the Sacramento area, he'll be there momentarily. I'm not sure his game plan when he gets in the ground, but he'll be able to. I'm not sure who's running. Let me see here. If Chris or who is kind of running the game plan there. But you guys will figure it out. And then I believe he's going to be having the training and trading sessions. So you'll be able to trade with Andrew coming up for a couple days, I believe. So going ahead on the day, we're right on the midpoint, a little bit high. I could see it closing kind of right around here, but it's definitely the fact that it held with these wicks, there's a pretty good chance that especially if it took out that 2100, could close up here at 2105. So I'll have to watch for that. Crude looks like it's going to work back down. We do have the API, so anything can happen. Could go back down to here, or it could be up here. Let me look through the kind of cycles. Seems a little tired up here. Definitely seems it can get down to this 46 area. We've got some we're up 320, 3 trades. We've got some casino chips, as they say, for trading the API numbers later on. So we'll see if we can get another setup coming below the band here for another long. Could be interesting at that 40 anchor price. All right, have a good day. We'll see you tomorrow. You'll see Andrew possibly today for whoever's meeting with him. Thanks a lot. Bye.